Good morning, good afternoon, everyone. Welcome to our very first session of Freddie Mac Affordable Webinar Series. Today, we will discover the possibilities with a very unique product from Freddie Mac called Home Possible Mortgage and HomeOne. This is a very important tool for us to understand and make good use of in order to promote sustainable homeownership. We in ARIA would take any opportunity to bring value and education to our membership so that we can help close the homeownership gap for the AAPI community. In the most recent State of Asia America report, we'll show you all the statistics among different subgroups of the AAPI community and by region as well. I know that our 42 chapters across Northern America are hosting events to achieve this goal on top of our policy advocacy effort. If you want a copy of the report I mentioned, please download from our website, www.aria.org, and become a member to support our meaningful work. Now, let me introduce you to the speaker today. First of all, this very important gentleman, his name is Jim Peranto. He's a training manager in the customer education services within the Single Family Strategic Delivery Organization. In his capacity, he leads a team with a focus in providing external training to Freddie Mac seller or servicers. Mr. Peranto facilitates a variety of courses focused on single-family origination topics through live events and webinars like today. So during his tenure in the mortgage industry since year 2000, Mr. Peranto has held several positions as an underwriter and underwriting manager. He also joined Freddie Mac in 2010, and prior to his current role, he was a single-family quality control senior underwriter. He uses his real-life experience from underwriting conventional, subprime, and FHA products while facilitating his training sessions as well. So it's really down to earth. Of course, how can we miss our dear Miss Monica LeGroux from Freddie Mac? She is the affordable lending senior within the single-family client and community engagement division. So without further ado, please join me welcome Mr. Jim Peranto and Miss Monica LeGroux.
Thank you so much. Give me 1 second as I get set up here, and I just want to check in. Amy, you can see my screen now. We're good to go.
You're looking great and handsome.
Oh, well, thank you. That's a lot to live up to. I just want to make sure sometimes you get started and people can't see the screen, and I want to make sure you guys can see what we're talking about here today, because I first of all want to thank you guys for having us. This is a privilege to be here to talk to you guys about Home Possible and HomeOne. Now, for those of you guys that aren't familiar, these are Freddie Mac's affordable lending offerings. I'm going to be going through both of these today, and I want you guys to see the flexibility and the different options available with these two offerings. They're very similar, but my goal for you guys today is to walk away knowing the differences between these two offerings. And when I say differences, they're going to serve a different market or a different clientele, if you will. So again, we're going to go through the different terms. You guys are going to be experts by the time we leave here today on both of these offerings and know how to apply them and which borrowers they're going to really be for. Before I get started, I actually want to bring Monica on. Monica's going to be jumping in during today's session and giving us some more info. Monica, do you want to?
Hey guys, welcome. I'm so excited to start the series with you guys. As Amy mentioned, this is part one of a three-part series. So please join us. Mark your calendars for next Wednesday. And the following Wednesday, we're going to be bringing some other subject matter experts in to talk about affordable housing and what Freddie Mac is doing to continue that mission. So we'll share some more dates and details at the end for the next coming up sessions. But Jim, I'm excited to get started.
Me too, and give me 1 second because I'm losing my chat. So, all right. Well, I'm going to get going. So if
We can watch the chat for you, Jim. Don't worry.
I appreciate it. Thanks. It's always something technical, but let's go ahead and get started. And the first thing I'm going to do is really talk to you guys about home buyers here today. You know, we're going to talk about first-time home buyers. I don't want to give you guys the misconception that's out there in the industry that Home Possible, HomeOne's only for first-time home buyers. It's fantastic, and you're going to see how it meets a lot of their needs. But for Home Possible, they don't have to be first-time home buyers, to keep that in mind. Now, I'm sure as you guys are in the market, you guys have probably seen some of this before. So I want to give you a high level of who's a first-time home buyer out there. So 33% of borrowers are first-time home buyers. And you can see this has remained consistent from the previous year. So 52% of buyers were 30 to 39, 88% of buyers were 29 and younger. So what does that mean? I'm sure you guys have heard this before. We're talking about millennials being 38% of the market share, and Gen Y is now 40%. Now, this slide really, I want to communicate with you guys some of the misconceptions out there in the industry. And this is where your expertise comes in when you're having your conversation with your clients. So we did a survey here, and a third of the people we talked to thought they needed to put 20% down. We're going to be talking to you about two options of where the borrower only needs to put 3% down. That's a huge difference, and that's going to help get people into homes much quicker. Additionally, they said they couldn't buy a home in the next 3 years if 20% down payment was required. 70%. 30% felt if 20% was required, they would have been never been able to afford a home. Again, let that sink in, because there's a big difference between 3% and 20% down and the time for that borrower to save to it. Now, Monica, I want to turn it over to you. Is there anything you want to add on to that?
Yeah, absolutely. So I know that, a lot of you might be real estate agents, on the call right now, and might be wondering, well, why do I need to know about products? I'm not a loan officer. I don't need to know about, what types of products are available, but that's not true. Real estate agents are the trusted advisors. You have a lot of past clients or referral business that are coming to you as the expert, as a trusted advisor. And so for you to know about the loan products that are available to your buyers, or potential buyers, it helps you educate them on how to get ready for home ownership. We can see here from the numbers that Jim just shared with us, is there are a lot of people out there that think 20% down is needed to purchase a home. And we all know that that's not true. And so we need to be out in the community educating people, in particular first-time home buyers, to let them know that home ownership is within reach, and you are the expert that was going to train them and get them up to speed, and provide tools to be able to do that. So absolutely.
Thanks so much. So let's go ahead and jump into our main part of our presentation here. And you're going to see me start with Home Possible. As you're talking to your clients, if I were in your shoes with my history, my experience, that's where I would direct my customers to first. And what you're going to see, the differences between these two offerings we're talking about today, Home Possible has some benefits that, if your customer can qualify, might put them in a better situation. So that's why, again, my first look would be Home Possible. Now, I'm sure a lot of you guys out there, and I don't have my chat out, but when you're thinking about a low down payment option, what's coming to your mind? And you guys can type it in the chat, and I'm going to see if I can guess what's coming to your mind.
Don't be shy, guys.
Oh, there we go. I got some coming through. There we go. My chat room finally popped open, guys, and I have this in the way. So let me get this out of the screen. Yeah, FHA, and that's what a lot of people do. What I find, and especially when you're talking to loan officers, is when you work with them, have I guess the best way is they're knowledgeable in one area, and so a lot of times they'll be pushing everyone to an FHA loan. I'll share with you, FHA has some great products. But something that really sunk in with me was when I was in an event and I was able to present next to FHA, and they came out and said they don't want to be your first choice, second choice, third choice. They serve a specific marketplace, and so for you guys, I want to make sure that you are putting your client in the best situation and giving them the best advice when they're working with that loan officer. So that's why I want to make sure you guys are considering Home Possible, which is a 3% down option, and we can go all the way up to 105% with a qualifying affordable second. And for those of you guys that aren't sure, I'll show you what an affordable second is, and a Freddie Mac resource coming up here shortly. Yeah, absolutely. All right, so one of the big things, and I just told you guys that Home Possible has some benefits that HomeOne doesn't. And the big one is MI. Now, Home Possible isn't always going to be a 3% down option. We do have some clients out there that want to put 20% down, and there are some additional benefits for Home Possible that might be beneficial to them. But a lot of them really want to take advantage of that 3% down. I just talked about FHA. When you're comparing MI for a Home Possible mortgage versus FHA, you can see side by side, there's a lot of times Home Possible is going to be more beneficial for the customer. That MI could be cancelable. FHA, life of the loan. So it's never going away. And then with FHA, you've got that MIP that's rolled into there. So that you've got some additional expenses that you don't have for Home Possible. So again, make sure when you're sitting down with your client and you're giving them the advice to talk to that loan officer, make sure that you're comparing apples to apples, because when you're looking at Home Possible, it could be a lot more beneficial. Flexible sources of funds. Home Possible has a lot of things that are available for your clients that just other offerings don't have. So first of all, let me say gifts. And I'm sure that's a question that's coming for you guys, and I'm sure working with your clients. With a single family, 1-unit residence, 100% of the money can come from gifts. Now I'm going to say that again because that's powerful. We're talking about getting people into homes. So as long as it qualifies for, with a related person, mom, dad, grandma, grandpa can give them that 3% down. So what does that mean for your clients? They don't need to save for that down payment. So again, that's a big advantage with Home Possible. Additionally, on the screen, you're going to see some of the other flexibilities out there, such as cash on hand. So cash on hand, some people you've heard it as mattress money. This is for maybe you've got a client that's unbanked and they don't use checking savings like a typical person that uses those to pay their bills. We've got some guidelines where they can use cash on hand that they've saved for that down payment. Additionally, affordable seconds, and as I said, I'm going to give you some more information on these. These are fantastic seconds. Some people call them soft seconds, community loans that have beneficial terms for your customers. Again, something to be aware of. I'm going to show you guys some resources on that shortly. And the last one on there, sweat equity. Maybe you have a client that you're working with that's really handy. They can do work on the property and get credit for labor performed or any kind of materials they're furnishing for that premise, and use that funds as part of the down payment or the credit towards the down payment using sweat equity. And again, sweat equity, cash on hand, these are exclusive to Home Possible. So we have some people that choose this offering just because of those flexible sources of funds. One of the big things I need you guys to walk away with here today when it comes to Home Possible is that there is an AMI limit. So in order to get your client qualified, they cannot exceed the income, which is 80% of the area median income. So let me check in with you guys. Have you guys, and using that chat box that I now have open, I can see your answers. How many of you guys are familiar with AMI limits, either with Freddie Mac or with some other products? You guys can let me know in the chat room. How many of you guys are familiar with AMI limits? Not familiar? No? Thank you. That helps me. I'm going to give you guys, a few of us are. Let me give you guys just a little bit more detail for those of you guys aren't familiar. With an AMI limit, that means that there's going to be an AMI limit I'm going to show you guys shortly with a tool that can't exceed 80% of what that is. Now, what we're looking for is qualifying income. So you might have a client that has, let's say they've got a primary job. They also have a second job that they work. If they're only qualifying with their primary job, we're not going to have to worry about the income from the second job when qualifying for the AMI limits. So we're only looking at income being qualified on the loan. So that's different than household income, because for those of you guys who might be familiar with some other products out there, some products look at household income. We're only looking at qualified income when it comes to AMI limits. Monica, is there anything else to add while I'm pulling in a tool?
Yeah, absolutely. So Jim's going to pull up our Home Possible eligibility income tool, and we're going to do a little demo. of what that looks like. And so like Jim is mentioning, with Home Possible, it has to be 80%. To qualify, it has to be 80% or lower than the AMI. And this tool is actually great for not only determining what the area median income is for your clients, but it actually has a great feature, and we'll go into depth a little bit, but I want to mention it here. You see the down payment assistance there highlighted on the screen. And it's great because not only will it show you the area median income for a particular home, but it also provides down payment assistance in your area as well. So maybe this could be used for one of your listings. You might have a listing and you want to see maybe who could qualify for down payment assistance. So when you're shopping or we're having open houses, you can talk to your potential home buyers to find out, what their, financial situation might be, to see if they might qualify for down payment assistance. Obviously, there's certain criteria that fall with that, but it could be used. This tool could be used in more than one way. So Jim, I see that you've got a property pulled up here. If you want to share a little bit more about what we're looking at now.
Yeah, I sure do. And so guys, just for time's sake, I typed in a property already, but as I'm doing this, if you guys are curious, you can type in the chat room and I can try to pull up a different property maybe in your area. But just for time's sake, I typed in an address. It's so easy to use, guys. This tool is so simple. And let me start with saying it's free. It's free for you guys, free for your clients, free for any lender out there. And one of the questions that came in, can any lender provide the Home Possible program? Any lender that's a seller service or Freddie Mac can provide that Home Possible program. It's not something that they have to sign up for. So if they sell mortgages to Freddie Mac, they have access to Home Possible. So all I did right here was type in the address and it pulls up the property. Here you can see this is the Home Possible income limit, and this is an annual income limit. It's going to show you the 100% here, and as we said, we got to qualify at 80% or less, and so you're going to see that 80% right here matches that Home Possible income limit. Guys, it's as easy as that. So let me also tell you, this tool is very interactive. So if I want to search on this property, or let's say you don't have an address, I can go around and just click on any of these properties, and it's going to show me within that area what the income limit is. I can zoom out, and I encourage you guys to test out this tool because it's easy, but also it's fun, and it's going to help you guys out. So I can just click anywhere here and find out the income limits for any of these properties.
Very cool.
Yeah, so again, very interactive. I want to highlight.
I did drop the link in the chat box if you guys want to bookmark that as well. But this presentation will be available to you guys after as well.
Perfect, thank you. So one thing that Monica said, and I'm getting a little bit of a slowness here. So let me go to my other one that I have up. There's this down payment assistance here. This is something you guys need to know, and this is very powerful. This is cheap money or low down payment options for your customers. So I clicked on this already before today's session. Oop, and it expired, so I'm gonna have to redo it. So let me go redo that now. So you guys can see, sorry, this is getting a little, I got too many things open at the moment, but let me try this again. I'm gonna click on it. And then we are going to, sorry guys, give me 1 second. Let me get it in the screen so you guys can see what I'm doing here. You can fill this out or your client can fill this out. And I'm just gonna say, hey, let's say $40,000, just something like that. Do they own a home? I'll throw in one of these just to see what comes up. You can see it's 5-6 questions, hit next. $24 programs, all in one spot. You guys saw how quick it was in real time for me to do that. Now, you're going to be able to go through these and see if the borrower qualifies. We've also given you information what's out of funds. So you don't have to spend your time looking at the ones that are out of funds, but you can see out of the 24, we've got 3 that are out of funds. This is a lot of affordable money for your clients. Now, one of the things that Monica and I had a conversation about was this is great for your borrowers that are looking to, or your clients are looking to purchase a property. If you're selling a property too, this is powerful too, that you can tell the people that are looking to buy that house that you're listing that, hey, there's 24 different down payment assistance programs available for this area. And that's something you can share with the potential buyers as well. Monica, is there anything else that I missed on this?
No, but that point is exactly kind of why we're here to educate. You know, a lot of people think that, you know, the loan officers are the experts, but we want to empower all the real estate agents out there as well to educate themselves on the tools and products that are available so that they can steer their potential buyers into the right products. And so you are working with your lender to make sure that you're providing whatever is best for them. So understanding the products a little bit more can help you guys reach more potential buyers. Learning about the down payment assistance that's available in your area is also another way that you can help home buyers, you know, get more additional money for their down payment, and obviously get them into homes. So absolutely, the link has been shared in the chat. Home eligibility tool will take you right to the down payment assistance link that Jim is showing now.
All right, guys. So I can't say enough how powerful that free tool is for you guys. And for, like I said, if I were in your shoes, I would be taking advantage of it. But for the moment, let me shrink this tool out of the way so we can get back to our presentation here. And we'll just do it that way. So in the presentation that goes out, there's going to be a link here. Monica, thank you. She dropped a link in the chat room. If you guys are looking to find it, you can find it on freddiemac.com. So several different places you guys can locate that tool. Now I want to get back into some of the things that I want you guys thinking about when you're working with your client on whether they're going to qualify for Home Possible. So I've got a yes/no question for you guys, and we can use that chat box. So let's say your client's going to convert their current home into a rental property. Do you think they might be able to qualify for a Home Possible? So in the chat box, you can let me know yes, no, not sure. And I'm sure this is something you guys are familiar with. This is kind of a familiar situation.
So we've got some no's, some not sure's, some no's. We got one yes.
Well, I think Amy's got some inside knowledge is why she's given that yes. And so, so you guys know to follow Amy's vote there. Excuse me, the answer is yes. I was getting so excited I had to cough there. This is something we want to point out for you guys. And this is a scenario that just happens all the time. With Home Possible, they can own up to 2 residential properties. So if they wanted to keep their property, turn it a rental property, or sometimes what happens is in today's market, as you guys know, maybe the selling of their house and the purchase of their house isn't going to line up on the same day, right? Maybe the closing for one house is 1 week ahead of time, etc. No big deal. They can own up to 2 residential properties. One other thing is very beneficial for Home Possible is that you can have, or I should start with saying at least one borrower has to occupy the property, but you can allow non-occupying co-borrowers. So as I said, mom, dad, grandma, grandpa can be on the loan with that borrower to help them qualify for the loan. So I'm going to go back to that chat room. So I'm going to check in with you guys. What are some of the reasons a client might want to add a non-occupying borrower? So think to the clients you've worked with in the past. Why have they added a non-occupying borrower? And increase the purchase price? Yeah, and I'm going to kind of tweak that to say their purchase ability, right? Maybe they can purchase something that's a little bit higher than they would be able to qualify without that additional borrower. Credit, absolutely. And Marissa, I'm going to tag on to what you said. Part of increasing that purchase price is additional income. You know, maybe our client is just starting out, you know, and they need mom and dad, or like I said, grandma, grandpa's income on there to help qualify for debt ratio purposes. Or could be used to improve the credit profile. Additional funds. So the non-occupying borrowers can bring those additional funds to closing. As a matter of fact, they can provide all the money. So that's another reason that mom and dad might want to be on the loan. Yeah, exactly, Esther, to lower that debt ratio, because then you can use mom and dad's income to qualify as well. Lots of different reasons. And again, it goes back to the flexibilities with Home Possible. When qualifying with an affordable second, your clients are eligible to qualify up to 105% TLTV. Now, what's an affordable second? I mentioned I was going to show this to you guys, and I'm going to go ahead and show you a resource that Freddie Mac has. And actually, let me check in with you guys. You guys can say yes or no in that chat room. How many of you guys are already familiar with affordable seconds? Some of us aren't. Okay. It's something that I would highly suggest you guys look into. Affordable seconds are, and they go by a lot of different names across the country. So depending where you're located, it might be called a soft second. You might have heard of it called as a community loan, community seconds, forgivable loans. It's all different names, and they mean the exact same thing. With these affordable seconds, they typically don't meet the standard requirements for financing. Let me give you some examples of some of the ones I've seen in the past. There might be something out there that says if the borrower lives in the property for 3 years or 5 years, the loan's forgivable, no payments. Or it might have something like interest-only payments for 10 years or something along that lines. So what we're talking about here are, I'm going to say, cheap money. These are going to provide your clients with the ability to put that down payment using these affordable seconds with some really beneficial terms for them, essentially. That's why I would suggest you guys get familiar with this. Now, Freddie Mac does have a webpage that you guys can look at for free and educate yourself on what an affordable second is out there for you. And Monica's ahead of me. Thank you, Monica. Monica dropped that link in the chat room. Monica, anything else you want to add to that?
Yeah, no, we're all in this together. So reach out, utilize your loan officer as someone that could, educate you on the ins and outs about it. I'm sure they're all eager to start networking with people again. I'm sure they're really busy with a lot of refis right now, but I'm pretty sure they're never too busy to talk to another real estate agent. So use them as a resource and say, hey, I was on this Freddie Mac webinar to tell me a little bit more about it. So utilize your resources to get your education as well.
Perfect, thank you. And we did have a question that came in I want to talk about real quick. I talked about how the borrower can own 2 residential properties. The one question came in, can one of them be an investment property? Yes, as long as it's not ours. So again, for Home Possible, our one borrower has to be a primary residence. So their second property could be an investment property. We do have some homeownership education requirements. So, and specifically when all borrowers are first-time homebuyers, at least one borrower must participate in a homeownership education and counseling program. Let me check in with you guys using that chat room. Does anyone know what a first-time homebuyer is to Freddie Mac? Because I want to make sure that we've got a good understanding here. I don't want to throw that term around and make sure that I want to make sure everyone's familiar with. When I say first-time homebuyer, who are we talking about? Yeah, there we go. We got a couple great answers. Haven't owned any home in 3 years. That's exactly what it is. So maybe someone's owned a home in the past. For us, they haven't owned any residential property in 3 years. So when all borrowers haven't done that, one borrower has to have that homeownership education and counseling. If for a 2 to 4 unit purchase, at least one borrower must participate in a landlord education counseling. On the bottom, you can see what just popped up. It says, must not be provided by an interested party to the transaction, including the originating lender or seller. A question we get frequently is, well, what about the MI companies? Because there are a lot of MI companies that offer the homeownership education counseling and the landlord education counseling program. We do not consider the MI companies an interested party, so that is acceptable. But my unbiased opinion, of course, is that Freddie Mac's is the best. we've heard a lot of great things about it, and you can see that we're celebrating 20 years with Credit Smart. One of the big things you're going to see with us is it's free. You know, how powerful is the word free? There's a lot of other people in the marketplace that charge for their homeownership education and counseling, not Freddie Mac. So when you guys partner with us, we're going to offer this to you guys for free. Yeah, I love free. I love the smiley face too. I'm going to bring on Monica. Monica, do you want to talk on this page or the next page and give a little bit
Yeah.
more?
Absolutely. So like Jim mentioned, Credit Smart is turning 20. And so it actually went through a little bit of a revamp. Some of you guys might be familiar, obviously, with the financial education that Credit Smart provides. It has great tools. It teaches, anybody. It'd be great to get maybe some of your sons and daughters to take it, but it goes over budgeting. It walks through how to purchase a home, talks about the importance of credit, what a credit score is and why it matters. So it's a great, resource for everybody. And again, it's free. In addition to it, we have the Credit Smart Coach. It was formerly known as Credit Smart Train the Trainer, where real estate professionals can become certified to teach Credit Smart in their community. That's going to be coming again with a relaunch in the fall of this year. So be on the lookout for that. So if you are certified and you want to get recertified, we highly encourage you guys to sign up for the notifications that are coming out about that. And then, Jim, if you want to go to the next page, what he's talking about, the home buyer education. So if you are looking to utilize Home Possible or HomeOne, there are some education requirements that you need to take in order to qualify for some of these loans. And Credit Smart Home Buyer U is free, and it's home buyer education. So it's, again, a financial tool, but this walks through the home buying process. It's free. It's easy to use. You can actually use your cell phone to do it. It's very mobile friendly. It takes about 3 hours. You can start and stop whenever you want. And as soon as you're done with the course, your home buyer's done with the course, they can actually send that certificate straight to their loan officer or even you as a real estate professional, so that they're all ready for closing. So great resource. Again, free for both you and your buyers, just free education to help more people understand the home buying process. And I'll drop the links in the chat for you guys.
Thanks so much. And I'm going to say free one more time because you can't say free enough, right? So let's go ahead and jump to our next topic. And I just want to, I want to pause for a second and just say 2 different offerings, both fantastic. They really serve a different market, if you will. So the concept I want you to have so far with Home Possible is they have to qualify for that AMI limit, either 80% or below. Now, there are a lot of people out there today, and some of the stuff that I've heard is with millennials, a lot of them are making a lot of money and they're just living at home, or, with the situation with the pandemic, they're looking to move out. So if you have a client that hasn't purchased a property yet, is making a lot of money, HomeOne might be the option for them. So let's go through the differences between Home Possible and HomeOne here. So you're going to see HomeOne is a conventional mortgage for first-time home buyers. So let's compare and contrast what we know so far. Home Possible doesn't have to be first-time home buyers. We talked about how they can sell their house, resell their house, still take advantage of Home Possible. HomeOne, at least one borrower has to be a first-time home buyer. So that's a big difference when you're thinking about your clients. Have they owned any property in the last 3 years? Yes or no, whether you're choosing HomeOne or Home Possible. Both are 3% down options. The big advantage with HomeOne is you don't have that AMI limits. So you don't have to qualify at or below that 80% AMI limits. Whatever income they make, that's fantastic. You don't need to do that step. There's a lot of flexibilities, again, for the maximum financing. It's really easy for the lenders to take advantage of HomeOne. And I know that's something that you guys aren't going to be doing, but just know for the lenders, they just run our AUS and it's going to tell them, yes, it qualifies, no, it doesn't. There's really no extra work in this offering, because I know sometimes when you look at some different offerings out there, as Amy shared with you, I've underwritten thousands and probably tens of thousands of loans. And when you look at like an FHA loan, there's a lot more that goes into it. It takes a little bit longer. You're not going to run into that with Home Possible or HomeOne. These are really simple loans and shouldn't slow down the process. HomeOne, here's some of the facts that I want you guys to be aware of. The LTV ratios, 97% LTV ratios, 105% with the affordable seconds. We still talked about that. 97% with the HTLTVs. As I mentioned, at least one borrower has to be a first-time home buyer, so that's a big difference. They just, in case you were aware, or if your client's asking you, we do allow refinances with HomeOne, but it has to be a mortgage that Freddie Mac owns, or there's an affordable second tied to it. It has to be a one-unit property only. Home Possible, we had a lot more type of properties that are eligible. For HomeOne, it's only going to be a one unit, not manufactured property. So again, that's something to keep in mind. All borrowers must occupy the mortgage premise as a primary residence. What does that mean? Mom, dad, grandma, grandpa can't co-sign on this property if they're not going to live in the property. So again, another concept I wanted to draw, a distinction I should say, between the two offerings. HomeOne's going to be fixed rate, no income limits. That's the big takeaway for this. And then homeownership education counseling is required when all borrowers are first-time home buyers, same as Home Possible. And then for us, these are all going to go through home loan product advisor only. All right, I've armed you guys with two powerful offerings to help your clients out. Now I'm going to check in and see who is paying attention, because we're going to go through two scenarios here together, guys. And I want you guys to think about if you were working with these clients, would they qualify for Home Possible, HomeOne, or both? All right, so that's what we're going to do here today. It's going to be a tale of two clients. So our first client, you can see they're looking to upgrade their home. They currently own a home, but they're selling their current property. Our client number two is our newlyweds. They're currently renting. They've never had any ownership in any residential property. So let's start with our first client here. Based on what we know so far, and you guys can let me know in the chat room, would you say that they would qualify for Home Possible, HomeOne, or they might qualify for both Home Possible and HomeOne? I'll give you guys a few seconds to find that chat room and cast your votes. All right, you guys are making me really happy here, because I think we're almost, I think we're at 100%. So I'm gonna go ahead and show you the answer before we go under 100%. You guys are right, it's Home Possible, and that's because they currently own a home. And so that's the process. If I were in your shoes, I would go through saying, hey, my clients already own a home. They're not first-time home buyers. I know I can't look to HomeOne. I know I can look to Home Possible to see, is this going to be the right offering for them? Let's explore that. So right now we know we got to look at Home Possible. Our clients in our scenario have a combined income of $63,500. The property is located in Houston. They sold their property, but they're looking for additional funds. I wonder if they have any additional funds with Home Possible. Let's take a look and see here. So as we go to our tool in our scenario, I pulled up their property address right there. And do they qualify for Home Possible with AMI limits? I know it's a little bit hard to see, guys, but it says 64,000 is the 80%. The answer is yeah, right? They're at or below that 80% AMI limit. So far we got thumbs up. We've passed the big test there. Now, do they qualify for any down payment assistance programs? As I showed you guys, as Monica and I went through, we click on the down payment assistance programs, and voila, we got a bunch of programs that if I were in your shoes, I would sit down with those clients and say, let's find you guys some free money or some affordable money to help you with that down payment. So again, it's that easy. Monica, anything on here you want to add?
Nope. I think that it's pretty straightforward. I think that these tools, again, are all free and available to you guys to use. Just bookmark those on your web browser so that you can reference them. And we're all into holding everyone's hand to get them through the process, and these tools are definitely free for you to use to make sure that you're using all the resources.
Perfect. And guys, we're celebrating because yes, we got them the dream home, right? It doesn't get any better than that. We were able to use Home Possible with the conversations. And again, that's how, if I were in your shoes, I'd walk through with the clients to A, get them qualified, and B, help them find some affordable money. Let's move on to our second client here. So based on what we've told you so far, would you guys say that they would qualify for Home Possible, HomeOne, or would they maybe qualify for both? Let me know in that chat room. Getting lots of boths, getting lots of C's. Fantastic. Amy, you got a really smart group here, and that's what we kind of said so far. So, so far, I would have the conversation with the client saying, yeah, you guys could qualify for Home Possible or HomeOne. Let's take a look, right? Doesn't mean they are going to qualify, but so far we don't have any kind of restrictions. So having that conversation with them, what's your annual income? We talk to them, 89,000. Again, it's properties located in Houston. They're first-time home buyers. They want to put down as little as 3% or put 3% down, and they're interested in additional financing. Let me know if this sounds like a lot of people in your market who would love to only put 3% down. We work with them. We find the property they're looking for, and so this might be some of the millennials we talked about out there who haven't purchased a home yet, but they're making a lot of money, right? Today's millennials are a little bit more educated, a little bit higher salaries than we did back when I was that age. So you might be in a situation with this with your client, right? Doesn't mean, well, I should first of all say it means that they don't qualify for Home Possible, but there are some additional options we can look at here. So let's say, okay, they don't qualify for the Home Possible income limits. Oh, there we go. I'm going to back up one slide here. I gave you guys a little preview, but you can still look at having them complete the homeownership education counseling. The lender can look at HomeOne, and there is no AMI limits here for HomeOne. So the fact that they're at 89,000 and the AMI limits for this location 64,000 doesn't mean that they can't do a 3% down option. It just means you would direct them to HomeOne instead of Home Possible. And again, you can still look at the down payment assistance programs we have available. That's still going to be helpful for you to help find some down payment assistance programs, and you would still take advantage of what Monica went over earlier, the Credit Smart Homebuyer U, our free home ownership education counseling. You can use that as well. We've got an additional link for that right here. All right. And again, that's the concept we want you to have. Okay, maybe that second client didn't qualify for Home Possible. No worries. We still got them a 3% down option, got them in the home. And it takes you back to what we said in the beginning. Remember the misconception? Most people thought you needed 20% down. We were able to qualify them with 3% down, get them in the home much earlier than if they had to save 20%. So hopefully walking through that, guys, is really how I would approach it in your shoes and really help determine, is this a client that's going to be best for Home Possible or HomeOne? All right, I want to bring on Monica right now because she's going to give you guys some valuable resources that you guys can use. So Monica, do you want to take it from here?
Yeah, absolutely. Thanks, Jim. And this is we're wrapping up the presentation now. So if you guys have any additional questions for Jim as it relates to Home Possible or HomeOne, please utilize that chat or the Q&A feature to ask your questions now. There will be time for us to go over additional questions while I cover these resources. And again, this presentation will be made available to you afterwards. So all the links and websites that we talked about in the presentation will be available to you. I'm going to go over a few more right now, and I won't be able to drop them in while I'm chatting, but they will be available to you. So our first resource is our Affordable Lending Insights page. You know, as a trusted advisor, we want to provide you with as much education and tools to help you understand the real estate and housing industry. So we have our Affordable Lending Insights page. It comes complete with ebooks, news articles that you can actually share from our Freddie Mac website directly to your social media feeds, so that your followers can know that you are the go-to when it comes time to buying a home. It's a great website to bookmark, so I highly encourage you guys all to check it out. Again, a free resource for you to educate yourself on the industry. Our next one is the down payment resource page that we spoke about earlier. Again, it's a consumer-facing website. Yourself, your clients, or anybody in the industry can kind of go through and get familiar with the website, poke around in there, and try to understand, the resources that are available. Use it, enter the address of one of your listings, figure out if the home that you're selling might be eligible for some free money. That way, when you have potential home buyers come in, you can kind of work with them to see if they qualify for any of those, programs that are out there. The next resource that we have is My Home. Now, My Home is a consumer-facing website. It has infographics, quizzes, different tools that your home buyers can kind of go through to understand if they're ready to purchase a home. It has information that they can get on refinancing. I know a lot of people have questions about that right now with interest rates being so low. Maybe someone's looking to sell or avoid a foreclosure. It definitely has resources that can cover all your home ownership questions. And again, it's not branded, so it's free for anybody to use. A great pressure-free place for people to kind of go and get some more useful information. Free resource for you as well. Our next one is our our buyer help centers. We have, HUD-approved housing counseling agencies across the country. They're a great resource for you guys to be familiar with. Maybe you have a home buyer who approaches you who's not ready, who might need some extra home buying education. They might need to get their credit score up. Maybe they want to talk to some sort of, debt consolidations or whatnot. These are free resources that are available to help homeowners kind of get ready for home ownership if they need some extra hand holding. That's a great resource for you to get familiar with. These are the centers that are training future home buyers. If they know that you're a real estate agent, they might be able to refer some home buyers back to you who might be ready to purchase after they've kind of gone through their boot camp of home ownership education as well. So great resource and another arm in the whole ecosystem of housing. And our last resource is our Real Estate Professionals Resource Center. If you want to stay up to date with news and information that Freddie Mac is kind of putting out, those ebooks that we talked about, upcoming events, new products, sign up for the Credit Smart Home Buyer, coach that's coming out in the fall. If you want to stay up to date with all that information, subscribe to our Resource Center. You're going to go to freddiemac.com/real estate pros. When you get there, you'll see all our resources. You're going to scroll all the way down to the bottom of the page. There's going to be a little box where you enter your email address and you click sign up. And you'll be able to pick and choose what sort of news and information you'd like to receive from us in your inbox. We don't sell anything. We can't market to your buyers. We're really here to be your resource and make you look good and be your cheerleader out in the market. So that's all for our presentation today. Again, if you have any more questions, please drop them into the chat. I'm going to pass it back to Amy so we can go over any last minute questions and she can close us out.
Wow, this is absolutely great. Thank you so much, Monica and Jim. And I guess I'm having too much fun here. So there is a question here, is that which maximum loan amount does the loan product qualifies, FHA or conventional loan limit?
Yeah, I can take that one. So for our Home Possible, it's going to be our conventional loan limits. I will say though, with Home Possible, you do have an option for our super conforming limits with a one unit property. Just know when they do take advantage of the super conforming limits, the maximum LTV drops from 97% to 95%. So they can do that with Home Possible. With HomeOne, it's just going to follow our conventional loan limits.
Sounds good. All right. Any other question, guys? I see a lot of friends here. Jad, and I see Joyce, and I see, Esther, everybody. No question? Is it really simple? Okay, can we get the list of website for resource?
Yes, yes. What I'll do, Vanessa, I'll when I send you the PDF of this presentation, I'll include a list of all the resources that I went through with links, and you can share it with those who participated in the webinar today. But the website that you should remember, freddiemac.com/real estate pros. That's the Real Estate Professionals Resource Center where you can subscribe and get all things related to real estate. So I want to remind you guys, I'm sure it will be posted. We do have part 2 and 3 of this webinar series. Next week and the following week, we're going to be doing a deep dive into our renovation products, choice renovation, and our green choice, our green products, green choice is also going to be presented on. And then we'll close out with a great session about millennials. Obviously, they are driving the future home buying right now. And so we're going to do a deep dive into their demographics and the trends that we're seeing with millennials. So great information. Be sure to look out for those links to register. We look forward to seeing you next week.
All right. So thank you so much again. But, all the participants, thank you so much for spending an hour with us, having fun and learning a lot. But you know how it is, right? Every time when we, went through all these webinar and then we forgot everything afterwards, right? Make sure you look out for the information that we're going to send to you, review them, massage them, and really apply them to the consumer so as to help us close the homeownership gap. And at the same time, these recordings will also post on the ARIA YouTube channel. Remember, ARIA has a YouTube channel. Don't forget about it. So if you forgot about it, go ahead and review it anytime before bed or whatsoever. But today, I'm so happy to, get this done with Monica and Jim. Thank you for the very helpful information. And we're looking forward to the next one. Have a great day, everyone.
Yeah, thank you so much. Thanks for having us.
All right, bye.
Bye.